Welcome, everyone, to this deep dive. Today, we're opening up the books, so to speak, on Shilchar Technologies Limited.
Right, an Indian company. And
Yeah.
they're in a really critical space making transformers.
Exactly. Essential bits for the world's electrical infrastructure. Now, our insights today, they're coming straight from the source. We've got excerpts from their recent Q4 2024 earnings call,
Mm-hmm.
and also their investor presentation. That covers Q4 and the whole financial year that just wrapped up, ending March 31st, 2025. It came out back on April 21st.
Yeah, that's right. And you've shared those with us. So our job really is to kind of sift through all the corporate language, the numbers,
Yeah.
and figure out what's really going on, understand Shilchar's performance, which has been record-breaking, apparently get a handle on their business model, and see what their perspective tells us about the wider transformer market, both in India and, globally.
Okay, let's get into it then. So basics first.
Yeah.
Where are they actually based? And when we say transformers, what exactly are we talking about here? Because it's not just one thing, right?
No, definitely not. The sources tell us they're in Vadodara, India. They specifically mention their Gavasad facility. And yeah, transformers, but like you said, it's diverse. The presentation lays it out pretty clearly.
Yeah.
They make power transformers, these are the big ones, handling higher voltages, up to 66 kV class, that's kilovolts. Gives you a sense of the scale needed for large power grids.
Right, the real backbone infrastructure stuff. But they also do distribution transformers. Those are smaller.
Yeah, smaller, up to 33 kV class, more for local distribution. Think stepping down power for neighborhoods, maybe industrial areas. But what really jumped out at me from the presentation, actually, was their focus on the specialized types.
Yeah, me too. That seems pretty significant.
Absolutely, because it ties directly into these huge global shifts we're seeing. They make specific inverter duty transformers. These are for solar projects, up to 33 kV.
Okay.
Then generator transformers for wind farms, also up to 33 kV. And even hydro transformers, going up to a pretty hefty 132 kV class for the big hydropower plants.
So a direct play on the whole renewable energy boom. But they haven't abandoned the traditional sectors either.
No, not at all. They also manufacture furnace transformers up to 33 kV class. Those are crucial for really energy-intensive industries like steel production. So this whole product range, it points to a really wide customer base.
Right.
The documents list private utilities, big renewable developers, heavy industry cement, sugar, steel, hydrocarbon are mentioned. Also large EPC players, the big construction and engineering firms, oil and gas too, and just general private corporates. They're quite spread out.
Okay, a broad reach. And how do they actually build these things? They must be pretty complex. Does the presentation give us any clues about their sort of operational setup?
It does give us a bit of a peek inside. They talk about having 3 production shops. Importantly, a dust-free environment using HVAC systems. That's crucial for quality in electrical manufacturing.
Makes sense.
And a state-of-the-art testing lab. It's NABL accredited. Now, that NABL accreditation is a big deal in India. It basically says their testing methods and results are officially recognized as being really high standard, reliable.
Got it. So quality control is paramount.
Seems like it.
Yeah.
They also mention a dedicated winding shop using automatic foil winding technology. Winding is absolutely core to building a transformer, so automation there suggests precision, maybe efficiency too. And a warehouse that's integrated with their ERP system for managing materials and inventory smoothly. It paints a picture of a pretty sophisticated operation.
And this focus on quality and efficiency, it looks like it really translated into results recently. The headline from their Q4 and full year FY25 performance is pretty stark.
Oh, absolutely. The management commentary cuts right to the chase. They achieved full capacity utilization.
Which is good in itself, but
But the kicker is they hit this on a run rate basis in Q4 of FY25. That was actually ahead of their own schedule. They were initially projecting they'd get there by FY26.
hitting full capacity early. That lets have turbocharged the financials. The sources are calling FY25 a record year for profitability. Let's maybe put some numbers on that from the P&L summary. They're in Indian rupees, crores. Remind us, 1 crore is
10 million rupees. So for the full financial year, the one ending March 2025, total income was 639.62 crore rupees.
okay.
Now compare that to FY24, which was 409.71 crores. That's a huge jump, 56% increase year over year.
56% growth. Wow.
Yeah. And EBITDA, earnings before interest, taxes, depreciation, amortization, sort of a proxy for operating profit, that hit 184.75 crores. That's up 63% from 113.30 crores the year before.
53%. And the margins?
Really strong. Their EBITDA margin for the full year FY25 was around 29.6%.
Almost 30% operating margin in manufacturing. That's exceptionally good. What about the bottom line, the net profit?
NAT profit after tax came in at 146.85 crores for FY25. That's up 60% from 91.89 crores. And earnings per share, EPS, basically mirrored that, hitting 192.55 rupees per share, also up 60%.
Incredible consistency and growth across the board. And just looking at the final quarter, Q4 FY25 versus Q4 FY24, was it a similar story?
Very similar. Explosive growth continued. The source data shows Q4 total income up 56%, EBITDA up 66%, even faster than the full year average, PAT up 59%, and EPS up 59%. Just a really strong finish.
And they mentioned this strong Q4, maybe driven by the year-end push, slightly shifted their business mix for the full year.
Yeah, just slightly favoring the domestic Indian market in the overall FY25 picture, likely because of that Q4 activity.
Okay, so stellar numbers, hitting capacity early. How are they managing this? The presentation talks about their, quote, superior business model positioning. What does that actually mean?
Well, what seems really interesting here is their deliberate strategy. They focus on niche product profiles and, critically, a made-to-order approach.
Right.
They aren't just churning out standard transformers and sticking them in a warehouse hoping someone buys them. They build specifically to what each customer needs.
So less like buying off the shelf, more like commissioning a custom piece of engineering. But they manage to do this at scale. They call it mass customization.
Exactly. And that requires a very specific kind of operational setup, as you said earlier. Their efficiency seems to be the key enabler here.
How so?
The sources point to, yes, the well-designed plant we talked about, but also, very importantly, they seem to leverage the wider Indian transformer components ecosystem really well, meaning they outsource some of the, let's say, lower value add parts, things like the transformer tanks, the big metal shells, and the radiators, those cooling fins you see. Bulky, relatively simple metalwork.
Okay.
They farm that out. But they keep the really crucial high-value stuff, the core winding, the complex assembly, the final testing firmly in-house.
So focus their own resources on the most critical, complex steps.
Precisely. And this approach seems to allow them to be really quick. It contributes to a faster turnaround time, or TAT. Basically, the time from getting an order to delivering the finished custom-built transformer. Okay, that makes sense. Outsource the simpler bits. Focus internally on the complex core assembly and testing. Speeds up the custom builds. And the presentation explicitly links this model, this niche focus, made-to-order operational setup to those really impressive financial results we just discussed. They mention superior operating margins, asset turns, and ROCs.
Exactly. ROC, return on capital employed. It's a key measure of how well a company uses its money to make profits.
Yeah.
High ROC suggests they're very, very efficient with their investments.
Right.
And their list of competitive strengths in the source material kind of reinforces this whole picture. They talk about the ability to deliver these custom solutions, but at scale. Diversification across different types of customers, different applications, different countries. Even so, they're not too reliant on any one area.
Smart.
And then significant entry barriers for their niche products, built, as they put it, on trust earned over decades.
That phrase again, trust earned over decades. It sounds, well, intangible, but powerful in this kind of industry, I imagine. How does a company like this build that trust? Yeah, the documents don't give, specific customer stories. But you can imagine, in this sector, trust is everything. It's built on delivering high-quality, reliable equipment consistently, year after year. And delivering it on time, especially when it's custom and complex.
Because failure isn't really an option.
Exactly. If a big transformer fails, the lights go out for thousands or a whole factory grinds to a halt. So being known as that proven, reliable supplier for decades, that's a massive advantage. It makes it really hard for new players to just jump into those specialized niches.
Okay, so trust, reliability, customization at scale, anything else listed as a strength?
Yeah, they also mention catering specifically to these growing industry segments. We talked about renewables, infrastructure upgrades, and crucially, having a robust capital structure.
Robust capital structure. What does that look like on their balance sheet?
Well, the summaries are pretty clear. They explicitly mention being debt-free.
Wow, debt-free in a manufacturing industry.
Yeah, and having surplus cash reserves on top of that. In an industry that needs a lot of capital investment, being debt-free with cash in the bank gives them incredible flexibility. They can fund growth opportunities from their own pocket, basically, without needing to borrow. That's a really strong position to be in.
Okay, so Strong model, amazing recent financials, debt-free balance sheet. It all sounds very positive. What about the future? What's the demand outlook look like from their perspective? Management sounded upbeat.
They certainly did. The commentary highlights a positive outlook for demand, both in India and for exports. They're seeing, quote, healthy order inquiries and business visibility. And what's really striking is how Shilchar seems almost perfectly positioned to ride several big waves of demand all at once.
Multiple waves. Such as?
Well, they list quite a few key drivers in the source material. First, just basic growing global electricity demand. The world needs more power, period.
Okay, fundamental driver.
Second, huge investments needed just to maintain and upgrade aging grid infrastructure around the world. They specifically call out the US and the EU. A lot of that equipment is old, decades old, and it simply needs replacing.
And transformers are right at the heart of the grid.
Absolutely. And layering on top of that, they mention a current global transformer supply shortage. The sources explicitly say this is creating significant export opportunities for capable suppliers like them.
A supply shortage?
Yeah.
Interesting. What else?
Then there's the big one, the energy transition. Massive build-out of renewables, utility scale, solar, wind, hydro, all needing those specialized transformers they make.
Right, the solar, wind, and hydro-specific ones we mentioned earlier.
Exactly. But interestingly, they also mention a continued push in conventional energy, particularly in emerging economies like India. So it's not an either-or situation. Demand is coming from both new energy and conventional sources.
Okay, so broad-based energy demand.
And one more piece. Private sector capital expenditure, CapEx. It's apparently picking up across the board, both in traditional industries like steel and cement, which need furnace transformers, and in newer areas like data centers, which are huge power consumers, and also companies building their own captive green energy projects.
So it really is a confluence of factors. Old grids needing replacement, new renewables needing connection, general economic growth, conventional energy still growing in places, new tech like data centers.
It's kind of a perfect storm for demand. And in this environment where demand is outstripping supply in key segments, the sources suggest a quality supplier like Shilchar can command better pricing.
Makes sense. Basic supply and demand working in their favor. Now, given they hit full capacity early, the big question is obviously future expansion. Did they talk about that on the earnings call, adding more capacity?
They did address it. Management acknowledged that, yes, overall market capacity for transformers is likely to expand across the industry in the next, say, 2 to 3 years, precisely because demand is so strong. But they also pointed to government data showing just how huge future power needs are projected to be. So the expectation is demand will likely stay very robust, maybe even outpace that new supply.
Okay, so the market context is strong demand, potentially continuing to exceed supply, even with some expansion. What about Shilchar's own plans?
Their immediate focus, they said, is on optimization, getting even more output and efficiency from the capacity they already have. They haven't finalized any specific new major investments yet, but the language they used was that the company is fully prepared to capitalize on the emerging opportunities.
Sounds like they're keeping their options open, evaluating things, but maybe being quite deliberate about the next step, not rushing into huge capex just yet.
That seems to be the message. Optimize first, evaluate carefully, but be ready to move if the right opportunity comes along, backed by that strong balance sheet.
And quickly, any concerns on the export front, particularly the U.S.? There was talk about tariffs.
According to the sources, as of that report date, there were no reciprocal tariffs impacting them, going from India to the U.S. Their export outlook was unchanged. They did say they are monitoring the situation, as there was some kind of temporary 90-day tariff pause ending, but yeah, for now, business as usual for their U.S. exports.
Got it. Okay, and to cap off what was clearly a record year, the board proposed some returns to shareholders.
Yes, reflecting that strong performance, they recommended a final dividend of 12.5 rupees per equity share, and also a bonus issue, basically giving existing shareholders extra shares at a ratio of 1 new share for every 2 shares they currently hold.
Okay, dividend and a bonus share issue. Both subject to shareholder approval, of course.
Always, yeah.
All right, so let's try and wrap up this deep dive. Shilchar Technologies clearly had an exceptionally strong financial year ending March 2025. A big part of that seems to be hitting their full production capacity much earlier than expected.
Yeah, that early capacity utilization really stands out.
And their specific business model, focusing on these customized niche transformer types, doing it made to order, and being operationally smart about outsourcing simpler parts while keeping the complex core in-house. It just seems perfectly tuned for the current market.
It really does. They seem positioned right at the intersection of several major global trends: grid upgrades, renewables, general electrification, plus that operational efficiency driving strong margins, and a debt-free balance sheet giving them flexibility.
It's a fascinating picture.
Yeah.
You mentioned earlier that management acknowledged overall market capacity is expanding, but government data also points to this huge future power demand.
Right.
It makes you wonder, how is that balance between transformer supply and demand actually going to play out over the next few years? Will supply catch up? Will demand keep accelerating? And maybe more specifically, what could that shifting balance mean for companies like Shilchar, who aren't just playing the volume game, but are focused on these specialized custom solutions? Does their niche focus give them more resilience or pricing power if the market dynamics change?
That's a great question. How does that supply-demand tension resolve?
Yep.
And what does it mean for the specialists versus the volume players? Definitely something worth keeping an eye on.